Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, January 2nd, 2024, first trading day of the year. Just wanted to wish everybody a Happy New Year. I hope everybody had a good holiday season there. And well, let's just dive into the charts, what I like to do. All right, I'm going to kind of go in no particular order. In fact, I'm just starting with the financials because I didn't want to forget it today. It's one of the, well, there's actually about half the sectors are up, but the ones that matter, or at least the one that matters the most, is down quite a bit, and that's technology. But healthcare is the second largest sector. It's up pretty healthy. Financials are the third largest. So I just wanted to start there and tell you that they look like the run is over, in my opinion, or very close to being over. Just looking at the chart of XLF here, we have a couple things. We have divergence. You can see from this point to this point, you have the negative divergence. Just like you had a divergent high right there at that major high, and just like you had a divergent high when they peaked all the way back in early 2022. So that was the beginning of the year as well. Right there, they peaked right in the start of January. It turned out to be a major top, and history doesn't always repeat, but it often rhymes. In fact, it would be unusual, but I think we're going to see another January. In fact, January of 2022, I think went down in history as the worst on record, if I'm not mistaken, the worst January, going back to when the data does 29. So anyway, I think we'll see that again today. We had those sell signals that we had triggered on Friday, right before we went on the last trading day of the year. Everything broke down. And again, let me get to the chart. So there's XLF financials. And when you zoom down to the 60-minute chart, that you can see that divergence. It just shows a little more. Well, it showed there on the daily, but you can zoom in and see it nice and clear here. We were diverging. We had a divergent high at this point, and like so many other things lately, we had that year-end drift. Markets were on pretty much autopilot, is what I like to call it, and we put in marginal new highs. So that's it. So we need to, of course, take out the recent trading range, that December trading range right here, a little box it like that, and that should do the trick. But we had the trick done on QQQ today, so I'll get to that in 1 second. We'll talk on that. So there it is, financials, and this is one that hasn't rolled over yet. It's up today, and it's right at its 52-week high, and oh, so besides the divergence, of course, that's not everything. We had the uptrend line, which was broken recently. So this is that same 60-minute uptrend line I just showed you. We're back here on the daily breakdown, back test, rolling over. And we're also extremely overbought. The last time we were overbought, meaning above the 70 level on the RSI, was right here. You can see whether you wanted to be a buyer or seller then. Time before that was right here. And you can see what happened then. Time before that was right here. You can see what happened then. And the time before that was right here. You can see what happened then. Okay, wash, rinse, repeat, guys. This isn't rocket science. There are no guarantees. I'm not trying to get overly confident here. I'm just telling you these are the facts. And this is one of the best looking short ups I've seen. And I've been maintaining that since, for the last few weeks. And even went so far as to suspend the stops on those, the QQQ short trade, the Treasury bond short trade, and all that stuff. So nothing's changed. The only thing that's changed in the last couple of weeks is the fact Friday, like I said, big day. It was last trading day of the year, but take it for what it's worth. We had those sell signals on the breakdown of QQQ. Let's jump into that. Qs are everything to me. They are the top components of Q. It's just a more concentrated weighting in the same top components of the S&P 500, and those are the stocks that move the market. They make the market. And so here's QQQ daily chart. There's that trend line I've been tracking. There was Friday's sell signal, very clear. You didn't have to squint to see if we closed below. It was a solid sell signal, and follow through today. One of the worst, biggest down days in actually probably months, if not at least weeks. And is it random coincidence? Absolutely not. It's on the heels of a solid sell signal that we had on Friday. When we look at the 60-minute chart, there it is, nice, clean. This is the wedge I've been posting. Beautiful little clean, well-defined uptrend line. A little minor trend line. We had a sell signal there. Remember that one? That was when we had the biggest drop in the biggest 60-minute candle, red candle in months. And we hit T1, which was the uptrend line. As usual, we get a reaction off the initial tag of a first target, or any target, the initial tag, and that was it. Put up, made a marginal new, still divergent high, extended the divergences. And then there's Friday's sell signal that I got out to you on last trading day of the year. It went down after the sell signal, a little bear flagging action right there, and broke down below that today. And on Friday, I said a break below 406.32, or I called it 406, should seal the deal. So in my opinion, the deal has been sealed with that breakdown. And it'll probably do it. But as I mentioned this morning, I expected a little reaction because we hit the it's right there. We're right on that previous reaction low. When T1 was hit, traders step in and buy those major pivots of column or reaction lows. And especially, you've got Pavlov's, dogs are in full effect with the bell ringing, and, they salivate, classic conditioning where the bulls are in buy the dip mode. So, but what tends to happen is as time goes on, they start buying the dips, and actually once those levels go, and it's incremental, but it starts to snowball after the market stops making new highs, and then they take out those lows where they're buying. Again, this is a logical place. That's why I told you this morning I expected at least a minor reaction. So far, that's exactly what this is. Very minor reaction, more so almost in time than in price. If you're looking to short, as I said this morning, 40, any kickback to just below, I wouldn't wait for 406.32, a little shy of that. If they happen to take that out, all eyes are going to be on that gap. The gap would be where we closed Friday, the top of the gap. And you could probably even put a downtrend line right there. So we'll see what happens. The bid has been relentless. It's been a voracious bid in the market. So, yeah, if I'm wrong, they just pop it up and we just keep going. And like I talked to you or told you in the previous videos, if and when these divergences get taken out and all that, then I just don't have a strong case to be bearish and short. Right now, it's one of the best opportunities I've seen in quite a while. And there it is. So, T2 is a minimum target. Still told you I favor that. In fact, so much I don't even care to game a bounce, which I usually do when I expect one. 392, a little bit above that. That's going to be a good level. Look at the thin zone here, too. I don't know if you can see because I have these levels turned down. There's two volume price histogram bars right here and here. I can use a box tool. They go out to here and here. And then right here, this is where they end. You have one right there, one right there. It's green and then red. If you don't have a good monitor, you're not going to see the red. And that's and then you have this big one right here. What that says is this is what I call a thin zone. It's similar to a gap. In this case, it's not a gap, but it's just not a lot of trades occurred. I'm trying to show you the thin zone here. And so typically, like a gap, once you enter a thin zone, you're going to go down to the bottom of that thin zone. So again, whether we kick back or not, it's a minimum target, and I would put this can change if and when we get there, but as of this moment in time, I would put very high odds on a reaction, meaning you could most likely game a tradable bounce. Active traders could close out a short position, go long, and obviously if we go much below it, sometimes you'll overshoot it a little bit. And that's, again, right at about 392. So that's what it looks like. And nothing has changed on my intermediate or longer-term outlook. I still maintain these longer-term targets on the daily chart. I've given you down to T5 right here. Remember, T1 was hit. T2 was hit. That's off the short way back here. And this is just that marginal new high scenario that I laid out all the way back on September 18th. Marginal new means just a slightly higher high and still a divergent high, which is what I was thinking could happen back then, and that is what happened. But again, now we have a sell signal, and so the drop, if you shorted on Friday's sell signal, if T3 is hit, you're going to get about 18% on that short. T4 is hit, you'll get about 21.5%, and then if T5 is hit, that's about a 24% drop from Friday's highs. And we start going up here, my thoughts. I'm not going to like it, but I will say any new high soon will still be a divergent high. So, like I said, when the divergences, if and when, are taken out on the majority of indexes and key stocks, then maybe something else is going on here. Alrighty, next up, NQ for you futures traders. That's the Nasdaq 100 futures. Remember, I have different trend lines, slightly different trend lines on QQQ and NQ. They track the same index, except these are futures. So there's always going to be there's a premium, a differential in price between QQQ is tracking the spot Nasdaq 100 as it trades. These are futures. Futures roll, a little premium in there, and they also trade around the clock. So there was that first sell signal we had. We went down. We hit T1, which was at the time we hit T1 on QQQ, and I always say that's why I cover both of these. Sometimes the QQQ traders are going to step in at support and buy, and they did right there, exactly there. And then sometimes you'll see the Nasdaq 100 futures traders step in, and then that turns the it's the tail wagging the dog kind of thing. Either way, that's that previous reaction high I mentioned this morning. We've been kind of consolidating on there all day. Like I said, more so a reaction in time. If we do bounce, resistance levels about right here, that same level, I've had it there before. That was the one I said back here should do the trick, and that was the trick right there when it was taken out. And then, of course, we took out that level on QQQ today that I said I think it was on Friday should seal the deal. So the deal has been sealed in my opinion. However, let's just say the deal will really be sealed on a solid move below today's lows if that happens. And that's that simple. We've already had the reaction here. So if you want to know how I trade, if you're looking to, because you may not get that bounce back, to me it's pretty easy. Just go to a 1 minute chart. We've already spiked down below there. So any move, even when you get close to that lows, will probably just go on down through there. But the low of the day is about 401.80 on QQQ. Let me go back to NQ. This is a 15-minute chart. I have a couple boards of NQ up, but you can see there's that previous reaction low, and that's right where we're at now. So, a break of today's lows will, be clear to NQ traders and QQQ traders that the previous support levels have been taken out. The one I had you on before was this one right here. So that's going to be comparable to that T2 on QQQ right there. Remember, you had this area of consolidation. Very, very good support. And again, I would be surprised, not shocked, but surprised if the traders didn't step in there. And if we get if we get down there, maybe I'm getting ahead of myself. No, there's a lot of possibilities. Maybe we want to back test. Again, the dip buyers are right now, or at least for months, have been voracious. And you saw some of the comments on the site, people giving up completely on shorts, saying to just keep buying, buying, buying. Someone even said just put all your money in leveraged long ETFs now and buy every dip. So you're going to get those, when you get a sell signal, again, usually on the shallow supports. And if this is the major top, end of the bear market rally that I think it might be, again, the way it works is if and as each of these lower levels start to get taken out, and that's not going to happen today, tomorrow, probably not even next week. But if and when it does, that's where you start to see the selling begin to accelerate. And then it'll, we're way above there. There's a lot of support below we have to take out. But, look, nothing's changed for months now. Remember my purple levels on the big fangs? I'm going to cover those real quick, and then we'll look at a few other things, and I'll wrap the video up. I'll do an update on crude, wheat, natural gas, the other treasuries, the euro. Those are the other, the big three, plus some other things I've been trading recently. Apple, just wanted to mention Apple. You had that beautiful little daily. This is a daily chart, bearish rising wedge. Apple broke down first. And now this is a line I've had here. I've had this support level, created that back in July 12th. You can see in the pop-up box, 186.65 support. We hit that, and that's what we're holding on. And so, again, with Apple and QQQ, everything needs to take out the lows, and that opens the door to the next stop, 181.52 on Apple, and that should probably align with that T2 on QQQ. You can see it's pretty good support right there. So if you're trading Apple individually, or you're a bull, let's say you're a bull and you're looking to buy, like I said this morning, buy T2. I think if we get down to T2, there'd be a great level, especially if you're looking for new highs. You could buy today's dip. That might work, but in my opinion, again, I don't think it will. I think we're going to, whether we bounce a little more or not first, I think we go down. And then that would be the level on Apple right there where I see put good odds that the buyers will step in, especially if it coincides with QQ. But I'm looking at bigger picture stuff, guys. This is just the beginning. We're just rolling off this massive, big divergent high. Again, I've covered this in recent videos. We're coming off levels, overbought levels not seen since the market peaked, and Apple peaked back here in January 2022, and we have almost identical big multi-month negative divergences leading into that high, and that was the start of this whole drop into January 2023. Long and strong, covering Apple, covering index shorts right there at the beginning of the year. Bullish, just like I was bearish at the highs there in 2022. Admittedly, wish I would have just tucked everyone away. Apple and Amazon were listed as my two favorites, I believe it was back then. But hindsight's 2020. All we can do is move on to the next one. And so I just wanted to point out that this, I think there's a good chance in hindsight, or down the road, this will prove to have been maybe another major top with. If my longer term weekly targets hit, we're going to take that out. That's what I still favor. But first things first, guys. And my point is, we have a lot of support down below, a lot of support levels that have to be taken out. But again, nothing's changed going back to August or September when I gave you these purple lines, and the lowest one is at 166.61 on Apple, and that's these two previous lows here. So that's kind of that all-in moment where I think we'll start to see waterfall type selling, and where you can, again, in my opinion right now, unless anything changes, at that point in time, kind of be short, where you heavy short, whatever that means to you. I'm not saying entire portfolio in one stock or one index, but for me, heavy short with much longer term targets. And when I get in that mode, it's I'm more liberal on where the stops are. And you just periodically, again, if we're down there and we start to break down, then of course at that point, if you've shorted here recently, you can lower your stops to protect profits. Let me just hit them all real quick. Apple, Microsoft, purple lines at 311.56. So we still, again, we have a lot to do. I'm not getting too excited today. It's a great start for the year if you are short. But a lot of work to be done. This is a major support level on Microsoft. That's that major previous reaction high, breakout to new all-time highs there, but it was a divergent high, overbought, as I say 100 times, thousands of times over the years. Breakouts that occur with negative divergences and overbought conditions usually fail. Usually, I don't know what the number, it depends on the security, whether it's an index, a stock, but I put it up there, probably over 80% chance that this breakout will fail. And where does it fail? It fails under almost today's lows. Again, 360. It's just back testing. There's the breakout, back test. It's been back testing it. Bulls win if they can hold that level successfully and rally on up and take out, put in another new high. I'm trying to draw an arrow tool here and ultimately go on to take out the divergences. But let me just tell you, anytime soon, it is a 100% guarantee that if Microsoft makes a marginal new high anytime soon, let's say in January, let's just right now say January, it's guaranteed to be a divergent high because these indicators are lagging so much they will not take out the divergences. So I'm telling you that because nothing is going to change if we have a little pop here and the buyers step in and take out that recent high, at least not for my longer and intermediate term outlook. It may foil the breakdown we just had on the 60-minute chart. So I'm not going to say nothing's going to change short term, but my intermediate to longer term outlook, and at least on this one in particular, won't change. Alphabet, lowest purple line is here. Gosh, I can hardly see it. I have to zoom in. 121-ish. We'll call it 121. Again, when we hit them all here, that's where this rally was launched off of. And that's where, we were covering because of that, covering all shorts, reversing long off that recent low. But we've come full circle. Divergent high. We had a divergent high there, and now we have just a slightly marginal new high, still divergent high. Big negative divergence. And again, this shapes my outlook for 2024, very much so, as it's been shaping it for a while. And so this is where we'll zig our way down, zigzag down here. Hopefully here in the beginning of the year, that's, within the next month or two, it would be great to see it get down there and start to roll over some of the longer term trend indicators. confirm this divergence with a bearish PPO crossover would be nice to see. And then boom, when these purple lines break, that's the all-in aggressively short moment, in my opinion. Again, that's not investment advice. It's just what I'm going to do. It's my trading plan. Doesn't have to be yours. Amazon, divergent high, uptrend line broken on Friday with follow through today. Again, wasn't just QQQ. A lot of individual stocks also broke support. The euro, everything else that I've been highlighting. And that's it. So back to that. That's Amazon, NVIDIA. Look at that. NVIDIA broke down today. I know it's a busy board here. Let me shrink this down a little. Give us a little more real estate up on the price action. And let me just show you what I'm looking at here. Trend line tool. This purple primary uptrend line, which again, purple because it's very important to me. I think it's a key trend line. It was broken today. That is a powerful sell signal on the king of the semis now. There is the herd's going to follow this one, I believe. It's a poster child of the AI hype bubble, and it's also a top component of the Nasdaq 100. It's the largest semiconductor stock by far by market cap, and it's got a sell signal today. What else can you say? There it is. There's the trend line. Boom. It's not. I don't have to squint to see if it's there. Like back here, little intraday breaks. No, that's a sell signal. My first target is down here, 449.49, 403.30, which is a purple line because that's important, but the lowest purple line I have, and I think, I'll tell you, and I said it, I think in one of the recent videos, I believe 403.30 will do the trick. Why do I think that? Because look at this massive, massive price channel topping pattern. This stock just pretty much peaked back here. It's been going sideways. I know bulls say, well, that just shows how resilient this market is. None of these big mega caps are going down, but yet they're not going up. You can call it what you want. It's a Mexican standoff between bulls and bears. I think we're going to go down this way. Sure, you can wait till 403 gives way, but to do that, if you shorted here on today, and right now it's subjective. We just broke down today. So if you short here, it's going to take, the stock's going to have to fall almost 18% to get down to 403. So it's going to be 20% before that level's gone. And then when that goes too, remember, you have the beautiful 200-day simple and exponential coming right into that level. So to me, it is excellent support. It is a very key support level that anything other than a false breakdown, obviously that's going to be bullish, but that's it. So these are the levels I'm watching, guys, in 2024. Put a high probability on the fact that we will get there and we will break down based on everything I've been talking about in these hour-long plus videos I've been doing recently. So there it is. Just I wanted to confirm that it's another check mark today with a break of the primary uptrend line right there. Even though we're just inches off the all-time highs in the stock. So we all see what we want to see. I see a sell signal, and you can call it an all in. You can get aggressive short. It's real easy because if you just put a stop up here, if the stock does this tomorrow or next week, and today's just a one-day profit-taking weird kind of, day one for New Year's trading day, and we do that, then the RR is phenomenal. So in cases like this, I'll often take a pretty, full-size short position. And so what do you lose? If it pops up here and you give yourself, let's say, a 9-10% stop loss, and you're shooting for, remember, my targets... My targets are a lot more aggressive than probably anybody out there. But if hit, my next target, remember, we already hit T2 to the button on the video. That's the targets I laid out back here when the market was peaking. We hit T1, we bounced. We hit T2, and we had a nice bounce, very nice bounce. But T3, if hit, I'm just trying to quantify it for you, put it in RR perspective, because that would be it is my next target. T1 and T2 are already hit. NVIDIA is going to fall 85%. So you're risking 10% to make 85. Now, the next part of that is what is 10%? What's your full position is, and that's where, let me show you something. I didn't mean to get off on a tangent, but this is something I created years ago. I love it. I even use it myself. Position size calculator. So whatever your number is, that's you. And so let's say, and you can do it in this way. So we know let's just say your loss, your risk reward ratio, you have a certain risk reward ratio, you can fill that in, but whatever your typical position size is. So let's just say 10,000, that's a round number. You can put in a beta adjustment there. I talk about that. It's a short trade here. And where is NVIDIA? NVIDIA is at 42 right now, almost 43. You're targeting, what did I just tell you on that? On the weekly chart, targeting almost 73. And so that tells you, and you stop. Let's go back. I'm looking at another chart as I'm doing this. So 10% above where we're at right now. It's going to be about 538. We'll say 539 even. 539. And that gives you a 7.3 to 1 risk reward ratio. Beta adjusted position size 1.0. Put that in. Tells you want to short. Where's the price? Oh, sorry. I already did all that. All right. You can see it there. So again, you're going to make 85%. If that's hit, you're going to lose the way I did it. So I might tick that down a little bit on the stop. 538 and do your 538 stop. That should have changed that, but it didn't. Not sure what's happening. 11.4. Did I do that right? 537. Oh yeah, all right. You get the point. You play around with the numbers, but then what it lets you do, it lets you see it in dollar terms, how much you're going to profit or lose. And then again, so what I try to say is these whole risk reward ratios and percentages to me are kind of moot. They do matter, but then frame it at the end of the day. You're not going to go broke on a $10 10% stop loss, and you're not going to you may not make a lot on a dollar. It's all about the dollar amount. It's not about the percentage term. This is a number that's going to make you go broke if that is, again, exceeds what your typical stop allowance is. So you can even plug that number in and say, hey, Randy, I'll take that trade, but I only want to lose $800. And again, this thing will then calculate all the other numbers will fill. So I didn't want to spend too much time on that. I just wanted to tell you it's I think a great tool. And let's move on. All right, so we can go over each and all of them. Oh, last with the big fangs, Meta. This is that's the weekly chart. I've got very long-term aggressive downside targets for the market, including Meta. This is Meta on the daily chart. Right on. I want to just show you this again because so I do these videos. It's just too much to put out in individual charts because there's too many I want to cover. That's a beautiful, in my opinion, a beautiful trend line. It comes off the October lows. You've got, of course, the reaction back there. And then you had a couple more reactions. We've been dancing on it. We're right on that trend line now. Big wedge, big bearish rising wedge when you look at the uptrend line and that divergence line. We're right there. So a little more downside. Like I said, we take out today's lows. And the way I look at things, so QQQ, I've laid out some short-term targets for active traders. These were put out there a couple weeks ago. Now, if we hit T2 means that QQQ is going to drop another almost 3%. What that's most likely going to do to Meta is take it down below here and trigger an even bigger sell signal on this primary uptrend line. Remember, NVIDIA just broke down today. So my point is, if we hit T2, yeah, the buyer's probably going to step in there, like I said, and buy leads. But it's also going to mean that we've triggered some more powerful sell signals on the more significant daily time frame of a lot of these key stocks. So hopefully that all makes sense. All right, guys, let's look at a couple other things. Bonds and stocks have been positively correlated, just like QQQ. I told you last week or the week before that I'm, suspending stops there. My convictions were that high. I wasn't going to get, taken out in that kind of automated, that automated drift, that kind of mechanical, low volume year-end drift we had up in the markets. I could see it for what it was. So they weren't taking my shares from me. You guys do what you want. And so, that was, and again, on TLT, we entered it right here. I mean, this trade barely got underwater as it is, so there's no reason to, let that one go yet. And I just wanted to point out now we have taken out, here's the uptrend line, right? There was our divergence line. It's not much. And if you look, there's a reaction low right there. So I could move this. That's the level I had it at. I could drag that down. It's about right at about 98. We're at 98.11 right now. Again, just like QQQ, should do the trick. If we take out today's lows and open the door down here, remember my first targets here, T1 zone, T2 zone, T3, and all we know is that there's been a stocks and bonds have been very strongly correlated because of interest rates. Remember, this means yields rising. If I'm right on this and TLT does this, yields are going to go up, and all of a sudden you're going to hear talks again about, as the Fed, the market's been trying to push against what the Fed has been saying, their dot plot, calling for cuts as soon as March. Well, let's see what happens. I'm just pointing out what's going on here in the chart. So I do see stocks down, bonds down. What else do I have for you? Oh, the Euro USD. On Friday, I posted that. I gave you a BOD trend line, meaning benefit of the doubt. This is the trend line I've been showing you for weeks now, pointing out this divergent high, saying a sell signal would come on a break of that. But on Friday, I think it was, I posted this, what I call secondary or BOD or benefit of the doubt trend line. And also I said that 110 level needed to go. Well, look what went. Boom, went. They push. There were 4. This is an hourly chart. These are hourly candles. 1, 2, 3, 4, 5. I mean, come on, tell me that. And that's the exact level I had it at last week. 110, 389. Look where they pushed it. So the way it works, and of course I've said this many times, and you probably know if you've been trading, support, once broken, becomes resistance. And so if I had the line there before, now that you have 5 candles backtesting that, followed by a violent rejection when the bulls saw that they couldn't take that out, that only further validates 110, 389 as a key resistance level, former support that's now been broken. So today's drop in the Nasdaq 100 in the markets was far from mere coincidence, because I said there's been a super strong correlation between the EUR USD and the stock market, as I've highlighted many times. So this just confirmed, when you woke up today or watched futures trading, the currency, the forex trading, that would have helped solidify, a short trade in pre-market today when this started falling. So there it is, and there's a little support right here coming up, but these are my support/target zones. This is E7 if you just want to trade euro via futures. E7 or euro futures, and there's a trend line which was there was a wedge that was sell signal 1, and we broke the secondary trend line, and this is these are likely targets, I think, pullback targets. And if so, point being, whether we can kick back first, but if we work our way down to these targets, that's going to mean euro down, which means dollar up, which means gold and silver down, and stock market down, because they follow the euro or the EUR USD. And you can see that too, of course, in gold and silver. And that's what I said last week. To be bearish and short the euro is to be bearish and short gold and silver, because they have a very strong correlation. So gold is down, not too much, but it's down today. There was a little bearish rising wedge. It broke. And so if the euro continues to fall, gold will most likely continue to fall, divergent high, and then silver tends to move more so in gold than gold. And it's been moving down with the euro recently. So remember, the euro peaked here. So gold and silver are down. Crude oil. Remember, crude oil felt reversed just shy of that T3 on CL crude futures, and it put in a divergent high there, and it's been moving lower, but you have pretty strong divergence forming here now. You can see we were pushing. Remember, I raised the stop. We were long somewhere in here, and we're right at about the stop level, give or take, maybe a hair above that right now, right around there. But we do have some nice positive divergence there forming here, as you can see on crude. So I suspect we'll probably get another reversal here. But at this point, I wouldn't give it much room. Really below today's lows is where I'd put a stop. But again, it depends where you entered this one. If you entered it, if you took it at all, if you took profits there, if you recycled back in, anybody could have any gazillion different entry points between this most recent divergent low in that breakout right there. Remember, we had a divergent low, breakout, made a marginal new but still divergent low, and we've been walking our way higher there. UNG, natural gas. Natural gas is still working its way up, following this divergent low. That was right there. Try to move it up. DL, divergent low, pointed out somewhere in here recently. And it gave you that first target there, 250. Hit it, pulled back, hit it. Finally, we broke out. We're above it. So you have really good pullback level. And I mentioned it last week, too. If we pull back, here's the uptrend line. Any pullbacks to that trend line and or the 250 horizontal support level would provide objective long entries with a stop somewhat below. Somewhat is up to you. I wouldn't put it too tight, but I also wouldn't put it too loose. Maybe a solid 60-minute close below the uptrend line and or 250 level. Well, 250 comes in first right now, so you have the uptrend line right below it there. And again, objective area to add back any long exposure, or add new long exposure with a stop somewhat below it. So that's how that looks. And UNG is just the ETN. If you don't trade futures, remember we already hit T2. We hit it with divergence, but we're holding up. There's the uptrend line right there. I'll make it a little thicker, brighter. There's the uptrend line right there. So same story. It's about $5 as the T1 was $5, $4.99, and the uptrend line. So any pullback to that level, again, provide an objective short entry with a stop somewhat below. And these are still the next three targets, T3, T4, and T5. Last but not least, do an update on wheat. It's still, same story. We were long way back here somewhere. We put in a marginal new and still divergent low. It was T1. T1 was hit again. It was hit again. Duplicate that. And it's not a random number. It's resistance, $6-ish resistance, roughly 607. Simple stuff. This thing is looks like a basing, because like it's basing here and it needs a breakout. And because we've had so many reactions there, if and when. So if you're not in it, or if you're in it but you're looking to add, again, it wouldn't be objective to pop that level. And then because it's been basing so long, I think that would be a pretty powerful move if we can break out of there. So that's it, guys. Same kind of things I've been highlighting recently. And I'm putting, a lot of focus on the market. I think we see I still think, for the last couple of years, we have a multi-generational opportunity. If this bear market plays out the way I think it's going to be, with some big targets. And me personally, I love the fact that everybody is bullish, or was heading into the end of the year. That just makes the, bearish case that much better. That's one of the problems with 2023 as the year went on. Too many got on board the bear camp, in the recession camp, and it, we certainly stretched the upper limits of the rally. But again, still viewing it as a bear market rally, especially when you look at the diversified indexes, the S&P and the Wilshire 5000 and everything else. That's still off their all-time highs. All right, let's wrap it up here. Get the video out. You have the levels to watch, and I'll continue to hunt for some new trade ideas. And if anything changes on my market outlook, which again, I just told you, it's not going to change today, tomorrow, or next week. Maybe next week if these near-term breakouts fail that we had on Friday. But as of now, like I said, it furthers my convictions to be short at this moment. All right, this has been Randy Finney with Right Side of the Chart. Have a great day, and again, Happy New Year to everybody.